Hello and welcome to Brass Tax Presentations. My name is Ryan Reichert. I'm a certified financial planner and enrolled agent and the owner of Brass Tax Presentations. And today we are going to be talking about the Qualified Tips Deduction for 2025 all the way through 2028. Now, this deduction was passed as a component of the One Big Beautiful Bill Act, and it was highly anticipated. Everybody's very excited about it. Unfortunately, as more information has begun to come out and we started to get some guidance from the IRS on the deduction, we're finding that the deduction is actually far more complicated than we originally thought it to be, or that we originally kind of expressed, because we didn't have any guidance at the time the law was passed. So what we wanted to do here is just do a brief rehash of what the rules are and then kind of talk about what the IRS has in store as far as their interpretation of these rules and as far as their administration of the deduction are going to be. So from Congress, they basically said, hey, we have a new qualified tips deduction. If your income is at or below $150,000 for your modified adjusted gross income, or $300,000 if you are married filing a joint return, then you may be able to deduct up to $25,000 of your qualifying tips on your return against your taxable income. Great change, great deduction, very exciting. Then they go in and they start listing out some of the issues that pop up. So once the taxpayer's income starts to go above those thresholds that I mentioned earlier, the $150,000 or the $300,000 for married filing joint, you'll start to see a reduction in your tips deduction. A little bit frustrating, but again, really they're trying to help out those servers who are kind of low to moderate income, or those taxpayers who are low to moderate income but are receiving tips in this era where basically everybody asks you for a tip on their little iPad thing, right? So they've got that set up with those income thresholds to make sure that they're primarily helping those lower to moderate income taxpayers, right? Then from there, they say, hey, the tip has to be a cash tip and it's got to be voluntary. And the nice thing is that the IRS stepped in and they specified, okay, well, what is a cash tip? Well, in the proposed regulations, they say a cash tip could be a tip that's either paid in cash or it could be charged on a credit card or a debit card. So like when you go to pay for a meal, you pay for it with a credit card and you fill out the receipt and you put the tip amount in. That can be a qualifying tip for the deduction. Even though you didn't give them cash, you gave them something that was like cash in the form of that electronically charged payment through a card. They also specify that like a casino chip or a stable coin type of cryptocurrency, those can also be eligible. Now note that I said a stable coin cryptocurrency. When you talk about other types of cryptocurrency, because the value of that currency fluctuates, it's not a true show of what the dollar is, you cannot take a qualified tips deduction for those amounts. It's the same thing where if the server was paid a tip via a meal that was given to them, that is not eligible. If the server or the taxpayer receiving the tip got, event or sporting tickets instead of a cash tip, that would not be eligible for the qualified tips deduction. And then again, most other forms of cryptocurrency, if that's the tip they receive, that's not going to be eligible as a qualifying tip, but it should still be income to the person who received that tip. When we get into the voluntary discussion here, you need to watch out for any of those businesses who have the mandatory service charges. So if I am a server at a restaurant and I'm working with a party of 6 or more or 8 or more, and the restaurant has a policy that says if you've got these larger parties, you've got to pay a mandatory 18% gratuity, that's not voluntary. And so those 18% service charges don't count as qualified tips for the purposes of this deduction. So something to be aware of. However, if there is a recommended tip that is included in the bill, and then you are allowed to modify that amount by either reducing it or increasing it, that is considered to be a voluntary tip, and that still can count as a qualifying tip for the purposes of this deduction. So all things that we want to be considering. One of the other things that we have to watch out for is the specified service trade or business rule with respect to the tips deduction. Now, if you've been in the industry for the last, 8 or so years, you're probably familiar with the qualified business income deduction under Code Section 199A. And the idea for this deduction is that, hey, if you're operating a qualified trade or business, any of your net income from those trades or businesses can be eligible for this up to 20% deduction. And what starts to happen is as the taxpayer gets to be higher income, their deduction will be phased out completely, potentially, if they are what they call a specified service, trade, or business. So these are people that work in the industry of health or the medical field. It could be attorneys, it could be accountants or tax professionals. There's a ton of different specified service trades or businesses. Performing artists is another one. And so those same rules for SSTBs also apply to your people who are receiving potentially qualified tips. And so this rule says if you receive a qualified tip in connection with a specified service trade or business, then that tip is not eligible for the deduction. But the way they check to see if you're in a specified service trade or business is not to look at the service the employee is providing, but to look at the services provided by the employer. So, for instance, in the regulations, they give us this example of a pianist, okay? So the pianist is an employee of a hotel. And so the hotel has their pianist employee come to the hotel to play music in the lobby. And sometimes they'll receive tips. Well, even though that pianist is technically performing a performing arts type of service, which would normally be a specified service trade or business, because they're an employee of the hotel, we look to the hotel to see if it's a specified service trade or business. And a hotel is not a specified service trade or business. And so because of that, the tips received by the pianist, who is an employee of the hotel, are eligible for the tips deduction. But if the pianist was not an employee of the hotel and they were simply an independent contractor, an independent performer, and the hotel paid them as a contractor, now we don't get to look to what the hotel does. We have to say, for that pianist who is self-employed, are they a specified service trade or business? And the answer there would be yes. And so now that pianist who is simply acting as like a performing contractor for the hotel, any tips they receive will not be eligible for the tips deduction, which is very, very frustrating. Now, in our update seminar, we're going to go through all of the list of the professions that customarily receive tips prior to 2025, and we're going to show you how that relates to these different specified service trades or businesses to check to see if your clients are actually eligible for this deduction, because unfortunately that for this first year is not going to come through on the W-2. You won't know other than if you ask your client about who they work for and what type of work that business does, right? So it doesn't matter what the employee is doing, it matters what the employer does. And that's really going to kind of blow the doors open for how complicated this deduction can get at the end of the day. Not to mention the fact that self-employed individuals can also be eligible for this deduction. And so for the self-employed, it becomes even more complicated because, again, for 2025, the IRS is not going to change the reporting documents. So the 1099 NEC or the 1099K is not going to show the amount of qualifying tips that that self-employed person received in their trade or business. And unfortunately, in the proposed regulations, they didn't address how we're supposed to figure out what amount of their income was from qualifying tips. So for those, service drivers, let's think of like your DoorDash drivers or your Uber Eats drivers or your Uber drivers, people like that. They are not specified service trades or businesses, but they do receive a large portion of their income from tips. Sometimes it could be 50% or more of their income coming from tips. How do we figure this deduction for those people? Again, we don't have guidance from the IRS at this point, but what we believe is that that driver should just be able to go into their app to see how much of the income from the year came from tips and use that as their qualifying tips amount when determining the deduction. Okay, so that's going to be for your self-employed sole proprietors. Again, once we get to 2026 and all future years, the reporting documents, the W-2, 1099 NEC, 1099K, all of those documents will have a separate line item for your qualifying tips for the purposes of this deduction. So they spelled some of that out for us in the proposed regulations that the IRS issued back in September of 2025. One of the interesting things that they mentioned in those proposed regulations is that if you receive a tip in connection with an illegal activity or prostitution or pornography, those tips are not qualifying tips. Now, this is interesting because these professions, illegal activities, prostitution, pornography, were never actually mentioned in the law that was passed by Congress. These are new restrictions that the IRS has just created out of thin air. Now, it does appear that they have the ability to create exclusions for certain qualifying tips, and this is them exercising that power. But, in a day and age where we've got applications like OnlyFans, there are a lot of tax professionals out there who have at least one client who is engaged in pornography in one way or another if they're on OnlyFans or something like that. Or you've got the legal prostitution out in certain parts of Nevada. Again, that is a legal activity, but the IRS is saying, sorry, you don't qualify for this deduction. It's really, really interesting. And so we'll have to wait and see if you have some of these OnlyFans models who are stepping up and claiming the deduction anyway, and then trying to, kind of go against the IRS in a Loper Bright type of argument where they say that those regulations are not valid because that's not what Congress intended for. It's not the appropriate interpretation. So it's a really interesting issue. We're going to have to see what happens later down the line with those taxpayers. One of the final things that we talk about in our short article here is how these tips are going to work for shareholders of S corporations. So if I'm operating an S corporation, my S corporation receives a tip. If it's an eligible business, meaning it's not a specified service trader business, and my income is low enough, can I claim the tips deduction if my S corp received the tip and I'm the shareholder of the S corp? They don't address that in the proposed regs. It appears to us that because the deduction has to be claimed at the individual level, the S corporation, when it issues the W-2 to the shareholder for reasonable compensation, the amount of qualifying tips would have to be reported on the W-2 in box 7 in order to qualify the individual to be able to take that deduction for those tips. But again, it's not addressed anywhere in the proposed regulations or any guidance that we've received from the IRS. So I want to thank you so much again for joining us today, just to give you this quick update on the tips deduction. We look forward to talking more about this in the update seminar that we're doing at 18 different locations all across the state of California. And then also out in Nevada, we've got Reno and Vegas this year that we're going to be doing. So check out those seminars. If you want to get a quick rundown on the One Big Beautiful Bill Act, we've got a 2-hour webinar about that on the website. We look forward to seeing you in the next video.